A slower pace of economic growth that's more broad-based. That's how one analyst describes Singapore's economic growth forecast of 3 to 5% this year. It comes as the country's economy expanded by a better-than-expected 7.6% last year. Heidi Ng tells us more.
Singapore's growth is expected to continue this year, despite uneven expansion across sectors. One analyst says that implies recovery will be more widespread, with a better quality of growth in 2022.
Some of the sectors, for example, hospitality, retail, F&B, all these clusters that have been deeply impacted during the COVID will actually play catch-up. So in a way, you would expect growth momentum, if you look at headline GDP growth, to ease off, but the quality of growth will improve. So in other words, you will see increasingly stronger contributions from sectors that has underperformed in the past 2 years.
The Trade and Industry Ministry says this year's growth is expected to be driven by the manufacturing, information and communications, and finance sectors. It adds that the construction and marine and offshore engineering industries are projected to continue recovering. But one analyst expects output for the construction sector to only return to pre-pandemic levels next year or later.
There needs to be a little bit loosening of the current inflows to allow for more, foreign manpower to enter. Projects are delayed, so there's pent-up demand to meet this bottleneck, as well as the planned developments in 2022 and beyond. But I don't think this will be done at one go.
He also forecasts a full recovery in the aviation and tourism-related industries in about 2 years as travel demand slowly revives. Meanwhile, external pressures remain.
Global supply bottlenecks remain and are expected to persist throughout the first half of 2022. This will constrain industrial production and GDP growth in the near term. Persistent supply bottlenecks, alongside rising energy prices due to geopolitical tensions, have also exacerbated global inflationary pressures.
Analysts add that inflation will be the biggest risk this year.
It will dilute and erode consumer purchasing power, and that would then in turn have some impact on growth. And from a policy perspective, I think central banks would have to shift their focus towards taming inflation. That it will essentially imply tightening of monetary policy, which will then in turn have a cooling impact on growth.
They expect policy measures in this year's budget to help Singaporeans cope with higher costs of living.